fragmented case management, disconnected workflows, manual tracking, and what about risk and fraud? So many questions, especially with the advent of AI. And here to provide us with some answers, we have Sriram Natarajan, the president of Quinte, on Bankadelic. From the studios of Karma Productions Worldwide in Chicago, this is Lou Carlozo's Bankadelic. Bankadelic, the colorful side of finance, where we supply expert views, riff on the news, innovate and investigate actionable insights, unscripted banking with a caffeine kick. I'm your host, Lou Carlozo, inviting you to sit back, grab a cuppa, kick up your feet. Here we go. If you're looking to grow your digital banking business, check out Lemonade LXP, the digital growth platform for financial institutions and fintechs. Lemonade LXP has both ingredients you need to drive digital growth: a learning experience platform that uses daily micro-learning to give staff the knowledge and confidence they need to promote and support your digital capabilities, and a digital adoption platform that supports your digital capabilities with technology walkthroughs that you can author in just minutes. So if you're rolling out new technology, merging with or acquiring another FI, or just looking to drive digital banking growth, you gotta drink the lemonade. For more information, check out Lemonade LXP at www.lemonadelxp.com. Hello, and thank you for tuning in to Bankadelic. And by now, perhaps you have heard the news. If you follow the show, we've hit 50,000 listens. It's been a long journey, but here we are. And to get us underway, we have Sriram Natarajan. Sri is president of Quinte Financial Technologies, also known as Quinte. That's a leading provider of intelligent automation and cloud-based solutions for financial institutions. Sri has more than 30 years experience in financial services for credit unions and payment processors. Most recently, he served as president and chief operating officer of Quattro Processing Services, leading the risk, analytics, and payments processing services business across the Americas and other international markets before the integration with Quinte in 2019. Sri, welcome to Bankadelic.
Lou, it's a pleasure talking to you.
And we were talking a bit off mic about what Quinte is, what it does. I would love it if you could share that with our listeners so we can get a better understanding of where you work in the intelligent automation and cloud-based solutions sphere.
Yes, Quinte Financial Technologies is a solution provider for banks, credit unions, and processors in the US. We have dozens of clients across the spectrum. What we provide is a case management solution which enables the institution to automate their processes, particularly around the GRC processes. It helps them to map processes, manage them end to end, and also now with AI support thrown in, it helps them to automate processes without having to invest a lot of resources into mapping and stringing those processes together.
Good stuff, no doubt. I just would love to know a little bit about your personal journey, how you got to where you are at Quinte and your perspective on risk, because it's a big deal. I think it's only going to become an even bigger deal as AI comes online and the not so good guys try to use it to infiltrate financial service institutions.
Yes, I started my career in American Express, and then I worked across banks like HSBC. I've also worked in GE Capital, in several roles across the consumer finance unit, across markets, different markets across the world. And I entered the ITES, the fintech industry, about 15 years ago in Quattro, and then moved into Quinte as the president in 2019 when Quinte was formed through an acquisition of one of the units of Quattro. And that's how the journey restarted into this world of financial technology.
And here we are in that world. And wow, we have got such a laundry list of things where financial services institutions, banks, and credit unions are really up against it. We've got fragmented case management, disconnected workflows, manual tracking, and more. I wonder, when you look at those pain points, what do you see as the real issues, which I think would have a lot to do with what you're bringing to the marketplace?
Yes, as you mentioned about risk, I think banking or financial services is mostly now managing risk. In the traditional world, we had credit risk, we had operational risk, we had liquidity risk, and you had market risk. But now the traditional forms of risk change or mutate into something very different. And there is more of real time risk and on the spot risk that financial institutions have to manage. As a result of that, the workflows are changing, the endless transformation towards digital or digitalization of financial institutions is another activity that's happening on the side, which is keeping not only the banks and credit unions busy, but at the same time, the entire ecosystem of processors and e-commerce providers and even the regulators have to contend with. So the ecosystem is expanding, and also it's inculcating a new technology every day. Even the technology is coming with new risks. As a result of that, the traditional processes which were managed in a certain process are all changing rapidly by the day. And that's where our case management solution is almost like a common thread that helps the institutions in managing not only risk, but also the processes and the operational rigor that they need to go with to manage these constant changes, and at the same time, the customer experience that they need to provide.
That is outstanding. And I would imagine, and I promised we were going to talk about AI a little bit, that AI fits into this picture now. Maybe that wasn't so much the case many years ago. I know in my own work, AI has started to make a real impact. How does AI fit into what you're doing at Quint?
Yes, now that we have AI tools which are affordable and which are easily integrated into our core system, it has several uses. One, it helps us in processing data at a much faster pace and also looking at variables which otherwise we could not. For example, let's take the cards dispute ecosystem. Over the years, as you've seen, thanks to class action lawsuits and also the regulatory actions on interchange, the balance of power on the card chargeback, especially for online transactions, has been shifting slightly towards the merchants now. Whereas traditionally it was always the issuers who held the upper hand, especially on a chargeback or on a fraudulent transaction. Now, with these new rules, which came about a couple of years ago, for example, the compelling evidence rules, which Visa and MasterCard have implemented, which allows the merchants to represent a chargeback and fight the chargeback. So what that does is it puts the pressure now back to the issuers. Because earlier, when the cardholders were disputing a transaction as fraudulent, you raised a chargeback and you give the credit to the cardholder. But now, since the merchants can fight back and represent those transactions, you now have a choice of eating up that loss as an issuer, or you debit the customer, the cardholder back, and you risk spoiling your relations with your customer, who's suddenly now seeing that disputes which I used to earlier get credit for, I'm not getting it. It affects two things here. One, it affects the customer experience with the bank in terms of the transaction closure. And the other thing that it also affects is about the concept of friendly fraud that we hear, where there are card holders who raise a dispute, know that they have done the transaction or they know it's a legitimate transaction, but yet they have got used to raising a dispute because they know how to game the system, they know how this thing works. You get a chargeback and you get a credit for it. So it kind of changes the whole equation with your customers. And that's what is happening across, like with faster payments coming in, and you have Zelle transactions. So payments in several forms are coming in, and each one of them has continuously evolving demands of the institutions, and particularly with the issuers or the institutions at both ends of the spectrum, the sender and the receiver. So what KSAP does is, using AI, it provides a ready-made platform for all these institutions to handle multiple forms of payment and also take care of all these demands, challenges that they need to face. For example, with friendly fraud or with disputes or even with check fraud, for example. So the use of AI is more as a tool. It's more to add to the richness of data, speed up things, look into variables which you're otherwise not looking into earlier. And at the same time, make sure that the dependence on manual intervention is reduced. There is manual oversight. The human expertise is not going to go away. But having said that, it also makes the entire customer experience of a dispute or a fraud or a complaint much richer and much simpler. And it's also easier to manage from the bank's perspective.
Yeah, that's great. We can really look at what you've described as an incorporation of AI at many points on the journey. I love the term friendly fraud too. I wonder if the other podcasters look at me and say, Lou, the friendly fraud.
Yeah, it's a bit of an oxymoron, but it's also known as first party fraud, mostly in the credit card industry, where the cardholders raise a dispute or complain about a fraud, knowing that it is not a fraudulent transaction, but yet they know that the way the system works, they can get credit for it and get away with it.
Now we touch on some things having to do with AI that, again, you're well aware of and have some really great observations. I can't wait till you share those with the audience. When you step back from the headlines, what are we looking at? A real structural shift in banking infrastructure, or maybe it's just a lot of noise and a lot of fear?
Yes, I think over the last few weeks or perhaps even months, there has been a relentless barrage of AI hitting all industries, but particularly the financial services industry, because usually the FIs are the ones who adopt new technology. And that's perhaps one of the reasons why there is so much visibility of AI within the financial services institutions. The thing about AI, or what it's threatening to do in terms of replacing a lot of the functions, or it's been seen almost like a, should I say, almost like a silver bullet for a lot of things. I guess the reality is different. Every 2, 3 years, we have this hype factor coming in. We had blockchain. Now we hear about quantum computing, for example. And so there's always something that is lurking around you and threatening to disrupt what you're doing. But AI seems to be a lot more involved and more of a real disruptor than anything that we have seen before. But having said that, what we need to step back and think is that the fact remains most of the POCs that are being implemented in institutions are what they are as POCs, and a lot of them have implemented some elements of AI into their processes. Many of them are playing it safe, like into the back office processes, for example. The customer facing implementations are more like chatbots, which were always there. So, what really the institutions are seeming to do is that they're trying to make the AI models more human, and the human agents, should I say, are leaning towards more automation. So it's a little bit of a strange situation where you want the AI models to behave like humans and you want the humans to manage the processes through automation. The fact is that today, if you look at any bank or a credit union, they all run on the core banking system, which is the heart of any bank or any institution. Now, the core banking systems are steady, they're solid, they've been there for years. These are very safe and sedate systems. So, now how do you have AI integrated into the core banking system? Would you allow Claude to access into your core banking system? Would you let loose a Claude agent into your underwriting or into your credit decision making? Now, these are questions which probably a lot of banks are thinking. The big question is that what are the risks of doing that? How much of a disruption are you willing to take?
Yeah, if there's such a thing as beyond a 360-degree view of this, you certainly have it. And I've got to think that you would be a wonderful person to advise financial institution leaders because there's so much overwhelm, as you've noted. As we ride off into the sunset here, I wonder what you might tell them to reassure them, how you would direct them in terms of a disciplined, manageable way to approach AI transformation.
Stick to the basics. AI is the end objective for a financial institution is not to implement the latest technology or to ride the wave of the latest hype, whether it is blockchain or whether it's AI or whether it is quantum computing tomorrow, for example. So I think as long as we keep our eyes on that, the basic reasons for existence, I don't think whether it's AI or anything else that should distract us. My submission would be that you have a layered approach. You understand what AI can do to improve your back office processes or the non-customer facing processes, reducing a unit cost of operations, making sure that your staff have better options to serve the customers in a better manner. That's a great point of focus. When you're dealing with your customers, how can you implement AI to, for example, support your contact center? A lot of it ends up going to a chatbot, for example. Not all customers really like talking to a bot, but there's nothing stopping you from using an AI tool to support your contact center. The thing about AI is not to see AI as an end in itself. That's where the problems come in. And that's where I think it's a struggle to get an ROI out of such an approach. If you use it as another enabling system, that's what would be an absolute manageable variable in today's complex environment.
I love how you created a laundry list of things that on the surface are very complex issues, but you have simple wisdom to guide financial institutions along. I would advise those of you listening who are in the industry, use your AI, make a transcript of this podcast, and then ask your favorite large language model to turn it into a plan, because it's a great plan. Sri, thank you so much for being on Bankadelic and for sharing from your knowledge base and letting us know what it's all about in 2026.
Thank you, Lou, and my pleasure. It's fantastic talking to you.
Sriram Natarajan is president of Quinte Financial Technologies. The company is based in New York. Be sure to look for Sri on LinkedIn.
You're listening to Lou Carlozo's Bankadelic, the colorful side of finance. This podcast is brought to you by our friends at NMD Plus, based in London, Chicago, and Austin, Texas. If you like what you've heard here, be sure to check out NMD Plus's financial technology podcast, Dave and Dharm Demystify, with hosts Dave Wallace and Dharmesh Mistry.
Bankadelic, sponsored by the William Mills Agency. For close to 40 years, the William Mills Agency has served hundreds of companies that provide a wide range of products and services in the banking, payments, mortgage, credit union, and related markets. The William Mills Agency is the largest provider of PR and marketing services for companies that market to the financial industry. For more information, visit williammills.com. With more than 1.2 million page views annually, Talking Biz News is the go-to source for happenings in business journalism. Whether you're a PR professional, a business journalist, or someone just breaking into the field, TBN is a source that you cannot do without. Whether you're following the Washington Post, New York Times, local media outlets, or some feisty news startup, Talking Biz News has you covered. Job openings are also listed and updated every day on the TBN website. Be sure to sign up for your free subscription to the TBN newsletter at Talking Biz News. That's Talking, B-I-Z, news.com. Ha! So the William Mills Agency thinks the bankers as buyers report is all that in a bag of microchips. But they've hardly begun to scratch the surface, and they're lucky I'm around. But if I were going to surpass their report with my own monumental achievement, what would I call it? Introducing the first annual Bankadelic Bankers as Whiners Report, where we bring you the top insights of the industry's spoiled brats.
Do I have to open my teller line again?
Babies.
I don't want to get through it. Another digital conversion.
Hipsters.
What good is a bank if the music doesn't feature a chainsaw solo?
And bored ex-CEOs banished from the banking business after ripping off countless customers, but still being allowed to escape with millions.
Don't you know who I am? I'm John Stumpf. Rhymes with harumph.
So if you've had enough of innovation, progress, seamless customer service, or dealing with visionaries, be sure to check out the first annual Bankadelic Bankers as Whiners Report. That is when we get around to writing it.
I don't feel like writing anything.
3 bullseyes. Number 1.
Every 2-3 years, we have this hype factor coming in. We had blockchain. Now we hear about quantum computing, for example. And so there's always something that is lurking around you and threatening to disrupt what you're doing.
Number 2.
The use of AI is more as a tool to add to the richness of data, speed up things, look into variables which you otherwise were not looking into earlier, and at the same time, make sure that the dependence on manual intervention is reduced, the human expertise is not going to go away.
Number 3.
Banking or financial services is mostly now managing risk. In the traditional world, we had credit risk, we had operational risk, we had liquidity risk, and we had market risk. But now, the traditional forms of risk change or mutate into something very different.
And now, Lou's views. Of the many guests I've had on Bankadelic over the last year who have talked about AI, Sriram Natarajan of Quinte is one of the best informed, most practical, and truly helpful. I took notes during the podcast and divided what he had to say into 3 distinct categories: hype, hope, and help. The hype is that financial services institutions feel compelled to jump on AI because everyone else is doing it. In terms of the hope, those who adopt AI right now can really get an immediate grasp on fraud. And let's face it, if the bad guys are going to have the tools, it makes sense that the good guys in financial services should have them and become better than ever at tracking all of the risks that banks and credit unions face every single day. And finally, the help. Consumers may not be aware that AI is working with them. Maybe they don't even care. They just want a smooth experience. They want to be treated well. Companies that can embrace the creative challenge of getting behind AI and fusing it with human help, well, they stand to crack the code of meaningful customer experiences. What happens when you put it all together? AI moves from an abstraction to a concrete solution. It moves from the hype sector to the help sector. And therein, I would argue, lies a great hope. Thanks for tuning in to Bankadelic. We hope you join us next time and check back in the weeks ahead as we build our podcast vault. Our business consigliere, the one and only Rob Gaynor.
Dude, I totally got into the show.
Thanks as always to the William Mills Agency for their generous support, Lemonade LXP, and Talking Biz News, a division of Vested LLC. I'm Lou Carlozo. You can catch me on LinkedIn, and when the feds close in on me, I'll be thinking. Until next time, so long.
Bankadelic is a production of NMD+, London and Chicago.